Hello guys, we try to continue our lessons about how to make thousands of dollars in each trade with small account. Today we try to see something that it is also hidden. I'm telling you, maybe 100% of all beginners, they have no idea about what I'm talking right now. I will explain, and this is very serious. It's the same as commissions. There is another thing. Now this thing I'm talking about in this video is the spread between the bid and the ask. I know some of you know what is the spread between the bid and the ask, and some people they don't know. There are even some brokers online that they have apps that they don't show you the bid and the ask, which is a real problem. Now I will explain what is bid and ask and what is the spread and how it affects your trade. Okay? Now, the bid and ask. When you go to your broker, when you put a symbol to buy a stock, they give you two prices. One on the left is called bid and they give you a price. One on the right, it's called ask and gives you a price. Now what are these prices? Why they give you two prices? Normally they should give you only one, right? You want to buy a stock, let's say you want to buy Facebook, just an example. And you are asking, how much is Facebook? I want to buy 100 shares or 10 shares or 1 shares, whatever shares you want to buy. Why they give you two numbers? What's the deal with these two numbers? Okay, these two numbers shows you, when you see the ask, it means what the market asks you to pay in order to get the share. And most of the time they are called market makers. They are hidden people, you don't see them, but they work in the market and they facilitate, they match sellers with buyers. So your broker will show you the ask, which is how much it costs you to buy one share. Let's say, I just give you an example, okay? With a small stock, at least you understand what I'm saying, and you understand how risky is this kind of stocks. Let's say the stock is $1. In the ask, you see $1.10. But you go to the left side and you find the bid and you find $1. You find that the spread between $1 and $1.10 is 10 cents. Now what does it mean for you? For you, what does it mean? It means they are telling you, if you buy the stock at $1.10, just you buy it right now, but if you want to sell it, you will sell it with $1. Now you ask why? This is the market. Why we have this spread so wide from $1.10 to $1 is just because the volume traded in the day, the shares traded are so low. Okay? They are so low. Let's say the volume is 10,000 shares that traded today. 10,000, 20,000, 50,000. These are called low volume. So when you want to buy a stock, the first thing you should see is the volume. If the volume is low, you should go to the bid and the ask and see how much is the spread. If the spread is minimum, like 1 cent or less, this stock is good because it is liquid. It means it is a lot of people that buy this stock. So if you buy and you sell, you don't lose that much. You lose only 1 cent in each share. So you don't lose that much. And this affects when you buy thousands of shares. Okay? Now I will give you an example, just an example of stocks. One we have a big spread and one which has a little spread, and we see the difference. Let's say you want to buy a stock that it is $1.10 and the bid is only $1. So there are 10 cents, okay, for each share you buy. Now what does it mean? If you buy 10 shares of this stock, it means $10. Let's say you buy $10 only. You will be losing $1. Let's say you buy, as the example I have given in all these lessons, you buy 1,000 shares. What does it mean? It means if you buy the stock at $1.10 and you sell it at $1, let's say you buy the stock and then you feel that this stock is not good, okay, or you are doing day trading and you want to sell it right away. Do you know how much you lose? You lose $100 just because you buy this stock. And you tell me, for example, right now, what is the solution? The solution is you should buy liquid stocks. It means where the stocks has high volume, like 1 million, 2 million, 5 million. But don't focus on this 5 million, 1 million. Go always to check the bid and the ask if it is 1 cent or less. Let's say it is 1 cent. How much you lose? Okay? Let's say you buy 1,000 shares. The stock is $1, 1 cent. And the bid is $1. Okay, it means the spread is only 1 cent. You are losing $10 from the spread, and where this money goes, it doesn't go to your broker, it goes to market maker. So this is the deal. Okay? In my subscription, which is how to search for stocks, or the other golden subscription, I put 12 lessons about the bid and the ask spread and the volume. Okay, if you are interested, you can just go and order the thing or subscribe and you get them. Because this is one of the most hidden things. Now commissions, a lot of people, they know about commission, but this thing, most of the beginners, they have no idea. Even some who have been trading for many years, they don't know that market makers are taking a lot of money from their account, but they don't know. It's just because they ignore, they don't know why we have this spread. There are also brokers that have apps online, they don't show you the bid and the ask. How can you trade if you don't have bid and ask? How do you trade? It's very dangerous. Okay? So check that. If you are with a broker that doesn't show bid and ask, you are in trouble because you don't know how much money you give to market makers. So these guys are working with market makers and they give you, they hide an information from you. This information, if they hide it to you, it means, mostly is the bid when you want to sell. This information will cost you a lot in your broker. So understand that you should take care of this problem. If you don't know, please, in the description of this video, go to the description and you find my email and my website. Please send me an email and then we'll, if you have a private question also. Okay, so thank you very much for this lesson. Please go to the last lesson, which is lesson 10. This is the last lesson, and that's it.